Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Matt Miller and Jess Menton. Welcome to our audiences across all of our Bloomberg platforms, television, radio originals, and those folks streaming us with our partnership through YouTube. Matt Miller, stocks pretty much where they were the last time we talked, and that is up significantly on the day. Also looking like they're going to be up on the week as well.
Yeah, absolutely. And this trade continues to be driven by tech, specifically by chip stocks amid the AI. I don't know if it's fair to use the word craze, but it certainly feels like it. Yesterday was all about the NVIDIA gains that we saw, adding a couple $100 billion of market cap to that chip maker. Today is all about Marvell, whose earnings came out after the bell last night. Up right now 32.5%. And as Jess Menton just pointed out to me, that would be, I think, the biggest gain they've seen this millennium so far. Is that right?
Since June 2000.
So almost, yeah, since 2000. Marvell.
Right, and taking a look at the NASDAQ 100, that's up, if you want to look on a weekly basis, more than 3.5%. So that would put it on pace for its best week since mid-March, and also up in the past 5 straight weeks, Romaine.
Yeah, absolutely here. And I think there are going to be a lot of superlatives coming out this. I think probably the biggest development we've seen this week are really kind of the fresh 52-week highs that we're seeing, at least on some of the major indices, something that we haven't been able to say for several months here. That includes the S&P, and of course it includes the NASDAQ and a lot of individual names as well in that mix. We get the closing bell in New York here as we head into a holiday weekend, Memorial Day on Monday. Markets will be closed. We should point out the Treasury market closed down about 2 hours ago. Here are your numbers. The Dow higher on the day by 300 points or 1%. The S&P higher on the day by more than 50 points or 1.3%. And the NASDAQ composite is going to finish the day higher by 2% or about 300 points. The Russell 2000 higher by 1% here on the day. But guys, we need to point out there is still a big focus right now on those debt ceiling discussions. That was actually a big part of the reason why we saw a bit of a rally here on the day. And just a reminder here, that daily reminder of where the Treasury cash balance stands. It right now stands at its lowest level going back to 2017. That headline crossing the wire right now, the Treasury's cash balance as of Thursday, $38.8 billion. Remember, on average, usually the Treasury has anywhere from about $300 to $500 billion on hand in order to pay its bills. That number dwindling as we wait for a resolution, Matt, in that debt ceiling standoff.
Yeah, let me quickly give you a look at the groups that moved higher and those that moved lower today while we digest this Treasury cash pile story and get a hold of our economics correspondent Michael McKee on the phone. You have tech obviously leading the pack, the Infotech index up 2.7%, and then consumer discretionary as well as communication services rising. So it's really the big growth stocks that were the gainers, as well as those that sell stuff rich people buy. On the downside, you had some of the defensive sectors. Utilities were off. Healthcare was off. The energy index was off. So maybe that's a positive sign for this market. If you're a bull, you can say that the people are selling out of these defensive stocks and just buying those that are really bullish for a continued rally.
And you want to talk about some of these big names. We were just talking about Marvell. That was indeed its best day since June of 2000, so surging about 32%. And this did come after the chipmaker did say it expects AI revenue to soar this year. And as I mentioned, it is trying to capitalize on, obviously, this AI spending boom, like when we are talking about other stocks like NVIDIA. Another one I have to bring up is in the retail space, looking at what happened with Gap. So that stock jumping 12%. So this is its best day in a year. It did report better than expected results for the first quarter. It did show the retailers' cost-cutting efforts. So not just tech when it comes to cost-cutting, but also retailers benefiting from this as well. And then I also want to end with what's happening with Broadcom, up about 11%. So this is best day since March of 2020. This is another one that's been currently trading around record highs and also a beneficiary from AI.
Let's run through some of the biggest decliners and start with Tilray. Of course, this is a cannabis producer. Priced in offering of $150 million of unsecured convertible senior notes. You can see shareholders did not love that. Here's a potential reason why. Bloomberg Intelligence saying that this offering will, quote, likely be modestly dilutive to profit. Tilray shares down over 21%. I also want to highlight Ulta Beauty. We've been talking about it all day on our program. So shares slumping quite a bit. You can see down about over 13%. And this, of course, after it tempered its annual operating margin outlook. They chalk that up to theft, basically increased inventory shrink. But you did have analysts also draw attention to slowing comp sales. So we'll see how that shakes out. And Virgin Galactic, of course, this is a third straight day of losses for this company. Shares falling about 16.5% or so. So they actually crewed their first flight to the edge of space for the first time in 2 years this week. But you also had KeyBank analysts pointing out that this company will likely need more cash before it's able to ramp up its next class spaceships in 2026. So still a really tough road ahead.
That's a look, of course, at what's going on in the equity space. A quick check on yields here. And this was a pretty dramatic week that we saw for yields cheapening on that 2-year Treasury for an 11th straight day. That pushed the yield higher on the day only by about 3 basis points. That may not seem like much, but remember, we're up more than 30 basis points from where we were last Friday and 70 basis points from where we were just about 11 days ago. You're seeing similar moves here, what we saw in the 5-year, the 10-year, the 20, and the 30. You put it all together here, and you still have a market, at least in the Treasury space, still a bit on edge, particularly when it comes to what the Fed does next. And of course, also a big focus here right now on the debt ceiling negotiations, trying to resolve that impasse. We just got that big headline here, $38.8 billion left here in that main Treasury fund that they use to pay their bills. And we're now learning that they have about another $67 billion of extraordinary measures left under its debt cap. Michael McKee, our Bloomberg International economics correspondent, joining us right now for a little bit more. And Mike, kind of put this in perspective for us. I mean, we read off these numbers, they sound low. What does that mean?
They're definitely low, Romaine. What you're talking about is a cash balance that the Treasury has available to spend. Normally, they like to keep about $500 billion in the Treasury account at the Fed because they don't know on a day-to-day basis how much they're going to need. So they try to keep an average balance of about 500, and now we're down to 38.8. Next week, we should have more. I think it adds up to about $150 billion or so worth of expenses that the Treasury has to pay. They will get some tax money in as well, so it won't be the total $150 billion in a hole, but it definitely puts that X date that Janet Yellen put of next Thursday into perspective. They're definitely running out of money now.
What happens now? I mean, they obviously don't want to miss an interest payment or a principal either. Can they stop paying, say, federal employees' salaries? Can they stop paying Social Security?
They can't stop. Well, let me put it this way, Matt. If they do run short of cash and we go into a debt default type of situation, they would probably have to stop paying some things. Now, whether they would stop Social Security or not is a question that is both technical. Can they do it with the computer systems they have? And moral/political. Would they do that because of the terrible headlines it would generate? The feeling is they would probably pay treasuries that are maturing. They'd pay the principal or coupon payments that need to be made. And they are probably going to have to hold off on paying salaries if they get that far. But we know Treasury has asked the various agencies of the federal government what could be delayed. What do you have to pay now? What could be delayed in terms of payment? And so they are compiling a list of what may not get paid on the usual schedule.
All right, Michael McKee there joining us by phone here. A look, of course, at where the Treasury stands right now, the money that Janet Yellen has to work with over the next few days and weeks as we get closer to that X date, as we continue to wait, guys, for some sort of resolution out of the folks in Washington. We should point out, I mean, most of the commentary, publicly at least, from both the Republicans and Democrats has been somewhat encouraging, basically saying that their differences are narrowing. McCarthy made it clear that they only need about 72 hours for folks to read this bill and be able to vote on it. So while, yes, June 1st is right around the corner here, there is some hope here that they can get this done before you get to that X date, whether it's June 1st, June 2nd, or whatever.
And you have seen that hope reflected broadly, clearly, when it comes to the equity market. This seems like it's been more of a bond story when we've been talking about the debt ceiling. But it'll be interesting to see once we get to next week. We also have the jobs report at the end of next week, as well as JOLTS numbers, even though earnings season seems like it's winding down still of Macy's and Nordstrom. But it'll be interesting to see exactly how the equity market reacts after this weekend in the debt ceiling negotiations.
All right. Well, it's been great talking to you guys. Thanks so much for joining us here on Bloomberg Radio to Bloomberg TV. We say adieu. We bid adieu for now, and we will go back to our Bloomberg Business Week radio broadcast and, of course, on Bloomberg Originals as well.